Myra says, good morning. I love the idea of paying off my mortgage within 7 to 9 years. But how do we approach the tax credit once we pay off the mortgage that we would lose?
That is a very good question. And we get that a lot, especially from tax accountants who do taxes, CPAs that do taxes. We get that a lot. And we get that from their clients who are asking us the same thing. And so here's my answer to that. So just imagine that you reach into your pockets or pocketbook and take out, you have $1 in one hand and 27 cents in the other. Here's what's going on. You have to pay $1 in interest to the bank so that the government will give you 27 cents of that dollar back. One more time. You pay $1 in interest to the bank so that the government will give you 27 cents back as a tax break for every dollar. So here's my question. Laws don't get made because they generally benefit all of the people. Laws get made because there are lobbyists who go to Congress to talk to people and say, let me try to influence you as to why we need to pass this particular law. And I'm trying to tell you here, folks, that it's banking that is promoting the tax credit on mortgages. Why? Because you have to pay $1 in interest to the bank, and the government gives back the 27 cents. Come on. So here's the great part about this. Every year you have that mortgage. Every year you have that mortgage and you qualify, you will get the tax break. So what we're saying is this. You just won't get it for 30 years. You're only going to get the tax break for about 7 to 9 years. But every year you qualify, you'll be able to get the tax break. But once the mortgage is paid off, you will lose the 27 cents per dollar. But guess what? You get to keep the dollar to invest any way you choose. And the earnings from that dollar is going to dwarf the 27 cents you lost from the tax credit. So it would be a different thing if we were getting $1 back off our taxes for every dollar we pay, but we're not. We're only getting a percentage. So let's keep that in mind and look at all of the numbers. So what we just heard, folks, was called a heuristic or a rule of thumb. And when we have a heuristic, which means this is what we're doing, we're talking about a tax break, it looms larger in our minds than it actually is. Okay? So if we would do the math, for every dollar I pay, I get 27 cents back. It doesn't loom as large because now we're working with the real numbers. So what do I want to do? Do I want to keep a mortgage so I can continue to pay $1 and only get 27 cents back? No. Let's save that money in interest, invest that money in interest that we didn't have to pay. And now that dollar that we no longer have to pay in interest, let's invest that too. All right. That's the answer to that question. I hope it helps.
That's good. Thanks so much, Don. In fact, that helped me as well. So I'm glad a question was asked.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.